Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back for another brand new episode of WSI TV. I'm Jordan Bishop, and I'm joined again by Mary Kate Mulligan.
Hi guys, welcome on back. Before we get started, remember as always to head on over to WSITV.com so you can access the WSI TV Vault for free, as well as all of the free daily newsletters.
Right, and first things first, we're gonna, eventually get into why the media doesn't want you to know about this. It's gonna provide you with a 376% yearly gain. But first of all, I think we need to jump into this viewer question.
Yes.
Mary Kay, I'll let you read it off.
All right, so we had a viewer write in and ask us, what are 5 blockchain stocks that we're currently watching? So here is our answer. We are looking at Overstock, Intel, IBM, NVIDIA, and JP Morgan. Now, we chose these stocks as companies that we think are going to be incredibly benefited by blockchain technology. They are really going to have a lot of the innovations that come from that. So they're great stocks to keep your eye on, and also the charts are looking great.
Yeah, that's exactly right. I know we've used Overstock.com before in a blockchain versus round. It shot up 85% when I picked it. So that's just a taste of what's to come out of these big stocks. Again, we appreciate you writing in your questions. Any questions you have, just comment them below. And we'll get right back to you, or you could email in at info@wsitv.com if you'd prefer to do it that way. But we want to hear from you guys, so go ahead, and let us know what you're thinking. But jumping into it, into the main subject here, we're talking about the overall stock market. It's been very volatile this past couple months. January hit all-time highs, and then it all sort of fell to pieces.
Yeah, so you've probably been seeing in the media a lot about the volatility and the chaos of the current stock market. One statistic that we found was talking about how in 2017, there were only 8 days in which the market moved up or down 1%. Already in 2018, there have been 23 days where the market moved up or down 1%. And we're just a couple months into 2018, so that is like a pretty big, scary statistic. But I think what's important to keep in mind is that 2017 was an abnormal year for the stock market. Things are not normally that calm. Growth is not normally that steady without any downturns, So really, something like this needed to happen to make up for the abnormalities of 2017.
That's exactly right. The market needs to inhale and exhale. It needs to breathe. It needs to, correct, as we've seen since the beginning of February here. It needs to happen, and it needs to shake certain investors out. But also what we've seen lately is the smart money coming back in, buying back into the market. We've been watching the 200-day moving average, which we talk about quite a bit. So these types of things need to happen. The only reason it's been so drastic is because we went a whole almost year and 6 months without a single correction. Right. The last time the S&P 500 corrected was early November 2016, right before the election, when everyone thought the market was going to tank. It bounced right off its 200-day moving average, which again is what we're looking at, and hasn't come close to it ever since. So recently we've had that healthy correction, and it's provided a lot of buying points for us, but it also weeds out a lot of the weak stocks, doesn't it?
Yeah. So the media doesn't want you to know this. Jordan said we have a stock here that's returning 376% gains a year. So a lot of times you want to look for those stocks that are resilient when the market is down, and we're not talking about stocks that shoot up when the rest of the market goes down. Something else is at work there. But stocks that are able to maintain their position when other things are getting pulled down by the stock market, which is what we've seen happening lately. When the market goes down, it typically pulls all of those stocks down with it. So when you can find a stock that's able to maintain its position, in this case, we are using FCell, which is a stock we've talked to you guys about before, and it has held steady during all the recent downturn. That is the stock that is very strong, it's very resilient, and when everything corrects and it returns to normal and starts going up again, FCell, we can assume, will jump up even higher.
Right, I think one thing to note out is the reason, stocks like FCEL, these resilient stocks, stay where they are is because there's buyers coming in, propping them up. These buyers are emptying all their other positions, but there's something in Fuel Cell Energy, FCEL, that's keeping it afloat, that's keeping the buyers coming in, that's making the investors hold on to their shares here, which is a very good sign. Technically, its chart looks fantastic. I know we've both invested in it in multiple ways. I know we both have options on it, as well as have bought quite a number of shares in it. It just looks like a fantastic stock right now, and again, it is resilient. For example, on April 2nd, when the market dropped 2%, FCEL held steady. It wasn't phased. I know it closed even. The beginning of the day, it looked a little shaky as we were watching it, but it revived. Those buyers came in. They weren't scared off by this movement. Again, like I said, the buyers came in and propped this stock up. So stocks like FCEL are very resilient. I know the energy sector is also looking the same way right now.
Yeah, guys, so you really don't want to miss out. One thing that happens a lot of times when we see these big downturns in the market is that those stocks that are resilient, even if they get pulled down a little bit, they get pulled into very attractive buying positions. And you really don't want to miss out, because it doesn't last long, because then everybody else realizes that the prices have dropped and it's a great opportunity to get in, and that drives the prices up. So there's a very limited window for you to really take advantage of what is happening in the market right now.
That's exactly right, and the media doesn't want you to know this. I mean, they're looking at these stocks that are tanking. I know Amazon's been doing poorly lately. It's not in a weak position, but it's not been doing as well as it has. Tesla's been dropping very sharply, and that's what the media focuses on. I mean, they're paid to pull a story out of the market. One thing I look at when I see these headlines is this is going to scare our viewers. That's why we're here to tell you. You find stocks like FCEL, and you should be good when the market comes back up. It really pulls back in that correction, and you should be good to go. So again, keep your eye on FCEL. I would also say look in the energy sector. XLE is a good ticker to look at. It covers the whole energy sector. And find other stocks like it. I mean, they'll be across all different industries. They will be holding up. One thing I did want to mention though in this episode is you'll notice I don't have lemon slices in front of me, as per the punishment that I should be receiving right now after losing the last round of Versus. That will be in the next episode. I tried to fight it off. Mary Kate's gonna make me do it, which is fair enough. I need to do it. So come back next episode and watch me take a bite out of a lemon every minute. But I believe that's all we have for today. Thank you for being here, and we'll talk to you next time. Cheers.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the